Welcome on board the management of RITES. We've got Rahul Mittal, the CMD, joining in on the show right now. Rahul, good to have you on the show. Your margins have rebounded quite sharply given the 20% top line growth guidance for the full year. Are you still penciling in EBITDA margins of around 21%?
Morning. Yes, you see, while there is a huge amount of competition and our order book has been successively changing with having more and more orders on the competitive basis, but considering our niche strength and in certain core areas of consultancy and also our focus on trying to execute the high margin orders, we would be aiming and trying to maintain EBITDA margins in the range of about 20 odd percent.
So, given that you're earlier guided for 15 to 16%, your PAT margins, on your PAT margins, that is, does that still hold, or do you think you will revise it upwards, your guidance?
No, I think the guidance which I had given earlier about EBITDA margins around 20% and PAT margins around 15-16% on an equalized basis, on an annual basis, I think we will continue to maintain that at a minimum level. On a quarter to quarter based on the revenue mix, there may be slight variations to that. But I think on an annual basis, that's the range that we will definitely maintain.
Right, but along with that, you have maintained your bullish stance on exports as well. What's driving this optimism? Is it the rail system, rolling stock or infra consultancy? And along with this whole tariff chatter around, do you believe that in any way will you be impacted?
You see, our international business has two elements to it, infrastructure project consultancy and export, design and export of rolling stock. And both those are showing healthy trends in getting fresh orders. We started about 5 quarters back and aiming for at least one export order a quarter. And we've maintained that even in the last quarter one. And now having got this total export order book of about 1,400 crores, we are in the execution stage. The first 2 locomotives have already just been shipped out in early July. So now we start generating revenue in the successive quarters. And the changing scenario is not going to impact us at all.
So that's on that. But also, Rahul, help us with an update on your Zimbabwe order. It's a rather large order that we've heard of. And last we heard the contract was signed, but it was pending funding confirmation. Tell us if it has moved into your order book yet?
You see, the 1,400 crores on Expotec order book, we have not included that 300 crores of Zimbabwe. It's been, as you correctly said, it's been pending for quite some time. While the agreement has been signed, but it was pending on funding from their side. They are still not fully in place. They are constantly in touch with the funding agency, the Afri-Exim Bank, and taking inputs from us. But we are very clear, we are not adding it to our order book till the funding is fully in place.
Since you were just talking about the order book, yes, the overall order book is quite robust at this point in time, but help us with the expected execution timeline for FY26. How much of that will be fulfilled in FY26 as well? And would we expect you to front load the execution, or is it more back-ended this particular year?
So you see, yes, you're correct. The order book is healthy at about 8,800 crores. And interestingly, out of this, about 3,500 crore, that is about 300 plus orders we got in the last 2 quarters of the last FY. Now, any infrastructure project average has a time span of about 2.5 to 3 years. So we are in the stage now where the design at the various infrastructure sites, the fixing up of the executing agencies, we are at that stage. We are watching it very closely, and definitely actual construction normally starts by about 8, 9, 10 months. And so by about Q3 onwards of this FY, most of this young order book will start generating actual revenue reflecting in our top line. So our focus is very clear, expeditious execution by latter part of this FY. So overall, on an annual basis, we definitely surpass the top line of the last year.
Okay, sounding good on that front, but Rahul, also help us understand if there have been any internal discussions on entering new verticals or expanding into high margin consultancy services that's beyond rail infra for now.
So you see, our focus on trying to further increase our consultancy basket, especially in the high margin areas, are focused on trying to expand our global footprints. So international consultancy has better margins, and that's what we are trying to do. That we have expanded our operations in the UAE with opening an office there in UAE last year. Already started work in Jordan. We're trying to expand more work in Latin America, in Southeast Asia, Philippines. We are trying to target some opportunities. So basically, in trying to give a more focused push on expanding our international consultancy as well as export of rolling stock.
All right, so we'll definitely watch out for that. But with this, Rahul, so good chatting with you. Thank you so much for taking the time out and speaking with us.